It is exactly 4:44 Central African time as we turn our sights now to tax practitioners in South Africa, warning that South Africans who have moved their offshore income may face a rude awakening. This is as the South African Revenue Bank rolls out new rules requiring all cross-border transfers of South African-sourced income to be cleared by the Revenue Service before funds can leave the country. They also caution that relinquishing South African citizenship does not automatically release individuals from their tax obligations, with residency and source of income remaining key factors in determining liability. For more on this, we joined on the line by Roxanna Naidoo, Head of Global Strategy at Latita Africa. A very good afternoon to you, Roxanna. Welcome to Africa in Business.
Thank you for having me, Thami.
So, Roxanna, many people who leave South Africa to work or to settle abroad automatically assume that they have no tax obligation towards the South African Revenue Services. Is this the case?
Well, that's the thing. The assumption is that one of the biggest misunderstandings we see, leaving South Africa does not automatically end your tax obligations to SARS. What matters is that your tax resident status in South Africa aligns with what we see at SARS. It's not your physical location. So if you are still as a South African tax resident, SARS can tax your worldwide income, including income earned abroad. So even if you qualify for the foreign employment income exemption or relief under a tax treaty, you still generally have a reporting obligation. And to properly end South African tax residency, there's a formal process that must be followed and documented, of course. And until that can happen, SARS may continue to view you as a tax resident of South Africa and expect full disclosure of offshore income and assets.
So we understand that SARS is strengthening how it receives and uses third-party data, both locally as well as internationally. How will this affect South Africans who have permanently moved outside of South African borders?
I think that's the question that everybody wants answered right now. For me, it means that offshore financial activity is becoming far more visible to SARS. So through things like global information sharing frameworks and then your local reporting systems, SARS is increasingly receiving data from foreign banks, financial institutes, and other authorities. So for South Africans specifically, working abroad, living abroad, this reduces the gap between what SARS can see and what taxpayers think is private. So offshore salaries, investments, and bank accounts are no longer invisible. SARS is using data and analytics to match third-party information against tax returns and identify discrepancies. Now, what does that mean in practice? In practice, this increases the likelihood of audits, verification requests, and historical reviews where offshore income was not properly declared in the first place.
So help us understand, Roxanna, is there a likelihood then that an individual may end up being double taxed, both by the country that they are resident in, where they're actually earning the income, and from their country of origin, South Africa?
Absolutely, there is a likelihood. Unless you submit an application to SARS via the DTA or double taxation application, you will be double taxed in both countries. There's a highly likelihood because the country that you are currently residing in will request you to pay taxes as well as South Africa. You need to invoke that type of a DTA with SARS to apply that privilege that you're now going to have. If it's not invoked and applied to SARS, it does not automatically happen. You have to physically go to SARS. Otherwise, unfortunately, you have the risk of being taxed in both places.
So this application would then be an application for exemption, is that it?
So this application will use the treaties between the two countries to determine which country has the right to tax you for that specific tax type.
And why has SARS decided to pursue the income of South African expats?
Well, from a SARS perspective, it's not something that they've decided right now. This has been happening for a while. This is about fairness and protecting the tax base. So South Africa operates on something called a residence-based system, and expatriates form part of that system. And it remains the concern of the expatriate taxpayer to ensure that they are enforcing the right status that they should in the South African tax base. So if they've not legally gone to SARS and changed that tax status, unfortunately, they will be looked at as a tax resident. So globally, tax authorities are under pressure to reduce cross-border tax leakages and ensure compliance. But SARS is aligning themselves with international standards and using modern data tools to close historic gaps. So I think in closing, it's not necessarily about targeting expats specifically. It's more about applying the existing law that we have more consistently and ensuring that taxpayers with international income are meeting their obligations. They are coming forth and deciding whether they'd like to seize that residency that they hold with SARS.
So, what would your advice as Latita Africa be for South Africans who are living abroad right now? How can they be proactive in this scenario?
I think it's important to understand that being proactive means not waiting for SARS to contact you before taking action. That's the worst thing you could do. Practically, this involves reviewing your tax residency status, confirming whether your foreign income has been correctly declared, and then reassessing whether any corrective steps are needed at that stage. For some taxpayers, that may involve formalizing their tax immigration, which is very important. For others, it may just mean updating prior returns or seeking relief through available disclosure mechanisms, which is another important one that SARS offers. So it's also about maintaining proper records. And I think many taxpayers forget about this. Keep records of your foreign employment, your tax paid overseas, and your financial movements as well. And a structured review now is far less disruptive and costly than reacting to an unexpected SARS investigation later on.
Oh, thank you so much, Roxanna Naidoo. Some really important news coming out there regarding SARS. Thank you to you and Latita Africa for keeping us all in the know. Thank you for your time, ma'am.
Thank you.
Thank you. That's Roxanna Naidoo, Head of Global Strategy at Latita Africa.